Morning Call, 12th of January 2026. I'm Mark Gardner. Stocks reached a record high on Friday night, despite the payrolls numbers signalling a fair bit of weakness in the US labour market. As you can sort of see here from the market map, it was mainly led by the chip stocks and chip and memory stocks, really. We are starting to see, a fair few analysts covering and recommending, the memory and storage stocks over the chip stocks leading into 2026. It seems to be a bit of a common theme. And whilst the Mag 7 just largely held things up overall, there was a slight increase in expectations of rate cut chance on the Fed funds rate. However, it's still under 20% at this stage for January. So, but look, I think at this point, these payroll numbers overall, December was 50,000 new jobs, down from 56 in November. Economists are expecting 66,000, but it's just these revisions. I mean, at some stage, they're going to come home to roost because revisions of previous month's data showed much weaker unemployment, much weaker employment market. With a combined 76,000 fewer jobs in October and November, but the unemployment rate edged slightly lower, and I'm not entirely sure how those numbers kind of work when you're in these backward revisions. But 4.4% at the moment. I guess it's how they sort of classify people, but we're seeing a fair bit of credit stress happening at the lower end of the market, and look, at the end of the day, while this AI infrastructure build out continues, you're likely to see, the stock market kind of hang in there. But a weaker broader economy means that they're not going to sell as much of it, and the maths doesn't really add up in terms of how these guys are going to monetize it. So this capex will really start to bite on share prices over the course of the year, I would expect. So it's probably something to be a little bit wary of. I don't think this is rate cuts and these sorts of economic figures are something to necessarily be optimistic about, because you'll have the capex start to hit balance sheets for the Mag 7 sometime through this year. There are a number of extraordinarily large IPOs this year: SpaceX, OpenAI, Anthropic, Canva, which are going to pull anywhere up to $3 trillion out of the market as well. And you're only going to find that money in the likes of Nvidia, Apple, Google, Microsoft, etc. Because as you can see here, these squares are based on market cap. Nvidia is bigger than quite a few of these sectors. I mean, you've got health technology and producer manufacturing. I mean, Nvidia is larger than that entire sector. Well, those two sectors combined. So I would expect there'll be a shift of funds out of those guys as well, which, coupled with some capex, with those capex hitting the balance sheets this year and probably not a hell of a lot more monetization, we are at pretty sort of dicey heights here. I do agree with the memory chip and the storage sort of thesis. We have been on Micron for some time. But we will we'll just see how that starts to play out. But again, you've got to have a healthy economy, and that is and usually the canary in the mine shaft is definitely the unemployment and employment numbers, and they are looking pretty grim for the moment. Bearing in mind that 120,000 by new jobs is essentially meeting the incoming migration. So we really are going backwards, including migration. ASX, yet again, pretty kind of boring, really. Everything else is kind of in that strong buy territory, but we are at key levels to the upside, according to a few decent technical analysts. But overall, in these periods where they're slow, where the market's slow and we're fairly illiquid, generally the passive flow tends to support the market a little bit more than normal. So you've got everything nearly in a strong buy here, except for you've got hourlies in the Aussie, Hang Seng and China, not in a strong buy, but every other time frame's in a strong buy. for all the indices we're sort of generally looking at. The Russell up the most for the week at 4.63%. Gold and silver continue their run. They say on rate cut bets, but look, it's been volatile times. Commodities and real assets just generally at the moment are in massive favour. And I think that the market's generally coming to a realisation that the tangible economy and the intangible economies are, one of them's gone on far too much of a tear, and the infrastructure they're going to have to build out for all of these new technologies is going to require a bunch of these commodities. So yeah, we've got just like pretty decent week for iron ore overall, at up 4%. Crude has had one of its better runs in the last few years, and copper continuing to head higher, be fresh record highs. Silver's just all over the shop, and and incredibly volatile, having 4 and 5% ranges quite regularly. Same with platinum, but overall in the week they've been, they just seem to keep pushing higher and higher overall. Lithium as well, doing fairly well, and uranium doing extraordinarily well. So there's been a lot of coverage in the news about strain on the grid from AI and data centers. Meta signed a deal with, I believe, with Constellation to provide nuclear power as well. And you've seen the likes of the uranium miners and nuclear power companies doing quite well in the last few weeks. There hasn't been too much movement really outside of that. The currencies haven't moved a hell of a lot. We've seen some figures out of Australia today that are weakening household consumption, which takes a bit of pressure off the RBA. I would expect, obviously, the commodities and energy will do very well today on the ASX, and continue to head higher. One very important thing that I skipped over was we basically had home builder stocks rallying in the US as mortgage rates fell to a 3-year low, because Trump's proposal for a $200 billion government purchase of mortgage-backed securities. There's been a Fed providing a lot of liquidity in the banking sector, so that could be policy disguise, a bailout disguised as a policy. Potentially, but and also we were expecting a Supreme Court decision on the legality of Trump's tariffs and his use of executive powers on Friday. We didn't see that on Friday, and look, if he did stack the Supreme Court the last time he was in, he was lucky enough to, basically it's a lifetime appointment on the Supreme Court, and there was a couple of judges that passed away, and he was very lucky to be able to appoint a couple, I believe, and sway in the Republicans' favour. But if it was to be ruled against, it's $150 billion in refunds to importers if the tariffs are overturned, and would be a major blow into the midterm elections for Republicans as well. So Venezuela, it was a big show and dance about having the heads of the oil companies at the White House. Possibly one of the longest and weirdly meandering press conferences I've ever seen. Trump just rambled for nearly an hour, to the point where most of the news agencies just had to switch off after about 30 to 40 minutes. Essentially, Venezuela has gifted the US $4 billion worth of oil that's already on its way. Depends on what your definition of gifted is. There's been a varying response from some of the oil producers and refiners on the back of whether it's worth going in there. They've got to promise stability. Trump's assured them that they will be, from this point for the foreseeable future, until they've got stability in Venezuela, that any exports will be dealt direct with the US. So, not a takeover, but, all of the characteristics of a takeover, essentially. So, we will, the world seems fairly okay with it at this point. the major concerns are over who might potentially be next, really, and he's tossed a few things out there, and which could be a little bit concerning, but we've sort of entered the white noise phase now, where there is so much going on that the market just it just can't handle and digest it. So it'll be and there is so many announcements, whether they actually get passed or they're enacted. You've got to weigh up multiple things at a time, and the market generally is weighing them up as a positive. So, but there's an argument for weighing them up as a negative, but at the moment that's not the way the market sentiment is flowing. So. Yeah, I would expect probably a bit of a sideways week this week, as more people come back to work, and we will sort of see how things pan out. In terms of the Australian market as well, the ACCC's announced that they're going to launch a lawsuit within the next 12 months for price gouging against Coles and Woolworths. I don't know how much that's really. I think it's probably more a buying opportunity than anything else. ASIC has proven itself time and time again against the duopoly, that they're a toothless tiger, and it doesn't really pan out that well for them. Health insurers were also saying that the government's new proposed policy on private health, on funding private hospitals, could make health insurance too expensive for over 500,000 Australians. And, so that there may be some, effects for those healthcare providers, health insurance providers today in the market as well. But overall, you would expect the banks with those household consumption numbers falling away, a little bit, and pressure relieved. The Aussie dollar might drift off a touch, and you might see the banks sort of start to drift a little bit higher after being hit a couple of times. So you can still grab our market outlook. We've got the webinar in 3 days from now. mpcmarkets.com.au/MPC-markets-2026-outlook. Pretty good reading in there if you're still on holidays. It's pretty easy reading as well, as you can see. A lot of charts. It's not too heavy, easy to understand. Not your sort of typical bank research document full of jargon. And if you want to know more, obviously follow us at MPC Markets on Spotify, YouTube, Apple Podcasts. If you'd like to start the year with some free recommendations and get your portfolio in order, you can go to mpcmarkets.com.au/mosaic, and you can it's our investor platform, which has all stock recommendations both here, the US, all of our reports, all of our podcasts, special reports, webinars, and everything. It's also available on Android and Apple. So yeah, good way to keep up with the markets. We're pretty handy at getting out what you need to know when you need to know it in an easily understandable and digestible form. So